Sandeep Tandon, Quant AMC joins us live. Sandeep, good morning. Thank you for joining
Very good
us.
morning.
I can see a smile on your face for a change. How good the funds are doing?
Reasonably well, given the environment which we are in, So, Nikhil, if you recollect, we have been propagating about how dynamic style of money management will deliver better returns. And this is something which we have been practicing because this changing world and the extreme volatile environment, that is the best way to capitalize and generate superior returns.
So, Sandeep, what is your stand on the two important components which you track at a macro basis? The decline in the commodity index, which is the global commodity index, Bloomberg commodity index, and the tapering off which has started in the dollar index. Both are instrumental for the inflation, for both are instrumental for fueling the inflation. Looking at how commodities have fallen and how the dollar index has reversed, has inflation reversed?
So if you ask me from a very near-term and medium-term perspective, answer is yes. Okay, because and it's not only about these two parameters. If you look at, we believe that we are at the very close to a lot of inflection points in various global market. Dollar index is one of the various currency data. If you look at a lot of risk appetite indicators, which we look at, or any other complex macro, if you to talk about, I think multiple data points are showcasing that we are close to the inflection points. So most of the fear indices of the various asset classes have spiked significantly. They have not reversed completely, but they're spiking. So which means next few trading session, 8, 10 trading session, 5 trading session, depends. So we are closer to a very important inflection points in the global markets.
So what's been your portfolio strategy of late? Where are you taking some chips off the table? There's a time you were long IT, there was a time you were long financials. For next 3 months, what is a better trade? Stay with the fashionable word financials or look at the contra names which are there in IT?
I think, Nikunj, since if you really ask me, one can look for some of the IT exposure, which we have very recently increased because this is not a core position, but as you can say, it's a non-core position or maybe a tactical bet sort of thing. Because we believe that even in US market is very close to inflection point. Okay, the Quant capitulation index for US equity, particularly for S&P, has spiked significantly and maybe in next few trading session it's very difficult to pinpoint because it has not reversed as of now. So whether another 3-4% correction is happening, but post that a very sharp rally is not ruled out, which can be in 10 to 15%, 20% sort of move which is there. That's the way data points is emerging. With that background, we would like to own some of the technology names more from a tactical perspective.
That's nice. Sandeep, morning first. One is also seeing a bit of a tactical shift, underperformers or non-performers like pharma, for instance, sporadically, of course, are making a comeback. We've seen the kind of move, for instance, on Cipla, which is sitting at a life high. FMCG, of course, has been going very strong. What was restricted to a move on ITC about 6 months back, now that's replicated across the board. Wanted to understand what are you making of these two sectors and whether you are adding positions here.
So we have added actually increased our FMCG exposure last month itself, where we pruned down some of the banking names and increased our exposure to FMCG because we believe it's a structure change, and even this quarter numbers on the you will see volume growth. Most of the FMCG companies will be reporting. So structurally, we are very constructive on the consumption name, not from a longer term perspective, but at least from a medium to short term perspective. At least medium term perspective, we are very constructive on the FMCG. Pharma has been a laggard, has been disappointed for a while. I They also have reached a stage where they have again hit a neglected territory. So this is again opportunity where some of these stocks which you mentioned have started, like one or two names have done very well. They have been outperformer in the market, and obviously they've been outperforming from the pharma perspective in a big way. I think time has come to relook at this space, not very in a very aggressive manner, but I think some amount of bottom fishing should be look at these names. Okay, but the way confident we are on the FMCG that you're talking about the volume growth, that sort of confidence we don't have on the pharma sector because in general number has been disappointed. So it's too premature to say whether we have seen the bottom in terms of earning momentum or not.
about your outlook on, the risk appetite indicators when it comes to investing in the mid and the small cap end of the market?
Can you just repeat? I missed out.
I'm asking about your outlook on the risk appetite indicators for investing in the mid and the small cap markets. What's your outlook?
So, if you recollect, right from June, we talked about in the mid of June, we saw some amount of exhaustion happening in the risk appetite indicator, including the liquidity aspect. That's the reason we have seen a very sharp reflex rally in the Indian global market, particularly in the Indian market. Going forward, some sort of corrective phase the risk appetite parameter, but they are broadly up. So I think I will look for a buying opportunity in these names because the risk appetite from mid-June onwards have improved significantly, and that is still inching up. And if you really look at any of the parameters, I always talk about Bitcoin as a sentiment data for the young generation or risk appetite data. That has not collapsed despite the correction which we have seen in the global markets or various asset classes. But Bitcoin has not shown any signs of weakness, somewhere around 21 to 19,000. That's a range which is around floating. So risk appetite overall, at least for India, is very constructive. And I believe that some amount of exhaustion is seen in the global markets also. So maybe by mid-October or so, you might see some sort of reversal on these data points also.
Continue to find conviction in auto and capital goods. I wanted to understand that even after the run-up that these sectors have seen, albeit selectively amid stocks, do you believe that the re-rating that some of the leaders within these two sectors are seeing is going to continue?
So the way we look at so far, we have only seen about China plus story, which is unfolding. I think now it's Germany plus or Europe plus, which is unfolding. And one more story, which might see reality maybe after a year's time or so, will be Japan plus. So this whole thesis, because of the way the value of these currencies have deteriorated and the raw material prices, energy prices has moved up. So India is in a very sweet spot from a manufacturing opportunity. We remain very constructive as a manufacturing. We think this is the new theme which is building up the way we have seen in China for last many decades. I think in the India in a very, very early stage, it's a structural story. So, and obviously capital good or industrials, and if you don't talk about auto in particular, they are the biggest beneficiaries. So I think it is a structural bull run. Buy on dip strategy will remain very effective for these sectors.
Sandeep, when you say IT is a contra buy, what gives you a conviction? Is it pure technical, or you think the market view in terms of the fundamental understanding that everything will go wrong for IT is something what markets are already pricing that in?
So I look at Nikuj, we look at more from a behavior perspective. If you recollect September, October 2021, we were the one of the few house who talked about this is the euphoric phase in the global equities and IT and new age companies in particular, and we pruned down our exposure. We rather we sold off the entire thing. The narrative was very constructive at that point in time. Now, if you have to look at the current narrative, maximum downgrades have happened. Virtually every analyst has downgraded the industry. And I'm not looking at just the one downgrade part. The narrative is extremely bearish. Okay, if you look at with the recent noise of CSFB, which is unfolding in last few days, and this is sort of noise which is floating around. And I'm trying to connect the dots. And if you look at the Quant fear index for the IT sector, and I am taking a much larger call for the US equity, particularly Nasdaq itself. We are very cusp of that inflection point, whether it's weeks time, 10 days time, 8 trading session, 9 trading sessions, somewhere we are very close. Okay, it has not reversed. So we are talking about extreme capitulative move unfolding in these global markets, particularly US. I'm more bullish on the US from a longer term perspective. I think that is the opportunity. So that's the reason I'm calling it more of a tactical bet rather than saying as a core position. We will not own any of these names in our core portfolio. But from a tactical perspective, it makes a lot of sense. It's not just a contra call, it's a more of a data-driven thesis which we are talking.
Markets make a new high in next 3 months.
Can you just repeat? I can't hear you.
Will Indian markets make a new high in next 3 months?
So at least you know it quite well. I am in that camp. In fact, closer to 15,200 in the month of May. Also, we talked about that you will see new high in the current financial year and as early as current calendar year. I still maintain that. Okay, because if you look at the current narrative which is getting built, extraordinary cautious, people are not willing to participate. Rather, everybody is looking to prune down their exposure. So the background is perfect. Fear index has also spiked. Capitulative moves are seen on various asset classes, whether you talk about currencies or commodities, or in general, if I have to look at more from
So,
a risk point of view.
so
I think the background is set for India to make a new high, and I'm not ruling out maybe as early in the fourth quarter of this year itself.
okay, will we make a new high and then go towards 20,000 before March ends?
So when we talk about new high, the new high does not mean 18,400 or 500 for us. I think it has to be decisively up. That's what the way narrative of new high would be.
Thank you so much, Sandeep, for joining in, sharing with us your outlook, talking about your views on individual sectors.